Hello, it's Robert Miner with Dynamic Traders Group with our DT Trade Strategies video for the week beginning June 14th, where we do about a 10-minute video with one or two or three potential trade setups in the upcoming week. And if not a trade setup, gain some market understanding, a little bit of knowledge about trading that we do for our Twitter and YouTube followers. Remember, trading's not about forecasting. Forecasting is for fools. Trading's about learning how to identify conditions with a high probability outcome and then develop specific trade strategies from that information that you had. Okay, let's get started and review two or three markets that we've looked at over the last couple of weeks. Well, this is the SPX. Last week, when we did last week's video, the market was right around here. We identified that it was in a position, or nearing at least, the end of a wave 5 of 5, maybe even 5 of 5 of 5 in Elliott wave terms. And that the upside limits would probably be around 42.52, 42.75. Well, it went nowhere last week, and of course we identify that it's reaching that extreme position for a reversal, but then that's one thing. Because we don't forecast, we trade, we identify specific trade strategies. I call it the initial signal as a pattern reversal signal, where whatever pattern we're looking at relative to Elliott wave structures completes itself, or at least indicates that it's probably complete. So far, the SPX has not come down and taken out any of the minor swing lows that indicates the wave 5 of 5 of 5 has made a reversal. So that reversal signal advances every time the market advances. So we want to recognize we're near an extreme. What's coming up this coming week? Ooh, a Fed meeting. FOMC announcement on Wednesday. I suspect we're going to come right into that announcement. That's where we're going to finish off this top. But so far, we haven't taken out that swing low to break the bullish pattern. So until, at least at this point in time, that low is at 42.1874 in the SPX. When that low is taken out, more than likely we've completed that not just a daily high, maybe even a weekly high, but at least a high lasting several days, if not several weeks. Take a quick look at the daily. Here's where we're at with the daily. We've got a really nice, clean 5 waves coming up from the March low. And right now, it looks like we're in what we call wave 5 of 5. That's pretty significant. So again, this top may be lasting more than just a few days, but it hasn't had a reversal signal yet. So by the way, keep a lookout at 42.0812. That's what I got labeled as this wave 3 closing high. If the SPX should close below 42.08, then that's a strong signal. We've made at least a weekly high, going to be sideways to down for 3 or 4 weeks. But the trend's up until on that 60-minute chart we take out that minor swing low. Just keep in mind that the daily momentums are dual look back overbought, and they're on what's called a bearish momentum price divergence. That's where the price made a new high. Momentum is not at a new high. So it's just representing the slowing down of the rate of advance. And look at these little days this past week, little narrow range days. Yes, it kind of crawled up slowly but surely. Most days a slight new high anyway, very narrow range. Just think of this, there's not a lot of buying power in there when it turns around. There'll probably be some capitulation. So be aware of that. The ideal time to finish that off, like I said, would be this Wednesday. But until we make the reversal signal, the trend's up, and until we close below 42.08, the weekly trend is up. That would reverse the weekly trend to down. Let's take a look at another one of my favorites that we look at frequently, and that's gold. So this is gold weekly data, where the comments for gold are relative also to silver and the GDX. I'm just finishing up on what we call big picture report for our subscribers, very detailed report on the longer term trends of gold, silver, and the GDX. So I'm only going to bring a couple of things to your attention here. And that is this decline from the August, this is weekly data by the way for gold, the decline from the August high of last year. If you're looking at that, what is that? Is that a bear trend? Is it a correction? What's going on there? So just take this one piece of information away, is by whatever sort of pattern analysis you do, and of course we kind of focus on Elliott wave, but I keep it relatively simple, is that this is a corrective wave structure or a corrective pattern. It's what we call complex correction. So the key piece of information, if this is a correction, when it's complete, when a correction is complete, what should follow? Well, an impulsive trend to a new extreme. So when this correction is complete, this decline in gold from the August 20th or August 7th high last year, when it's complete, the bull trend, the higher time frame bull trend, should continue to a new high. What signals it may be complete? An impulsive trend against the correction. So is this advance from last March, the low last March, is that impulsive or is that corrective? Is that a trend or is it a correction? So those are just the simple kind of questions to answer without getting too hung up on details of Elliott wave details and labels and all that. This is the daily data, close only data. Is that impulsive or is it corrective? And if it's impulsive, what does that imply? It implies that more than likely the higher time frame trend has reversed to bullish from the March low, and that March low was the end of a major correction. So it doesn't mean that gold and silver and GDX are all going to go straight up from here. In fact, more than likely, we're going to see a few weeks sideways to down. But this is a really important piece of information through today, is that going into the March low, it was a corrective structure. Coming out of the March low, it has been an impulsive structure. That's significant. Really want to keep up to date with gold, silver, and the GDX. Again, consider a subscription to the DT reports. There'll be a big picture report, long-term reports with monthly, weekly, daily charts that we'll have available for subscribers next week. And then, of course, we follow everything up with gold, silver, and the GDX every day.